Welcome to this month's Economic Update. I'm Sinead Rafferty, Portfolio Specialist at NAB Asset Management, and I'm joined by our Senior Economist, Bob Cunneen. Welcome, Bob.
Thanks, Sinead.
Bob, in recent weeks we've seen the US impose protectionist measures, and now the Chinese have responded. Can you give us an update on that?
Yes, so President Trump announced tariffs on selective Chinese imports, particularly electronics and machinery, and that 25% tariff was going to start applying from July the 6th. Now, President Trump has also threatened additional tariffs on another $500 billion of Chinese imports. Now, at this stage, China has only retaliated for the first $34 billion or so. But what we've got, what is particularly at risk, is this escalation and retaliation across the world to what America is proposing. And because of that, it's a key threat to the global economy.
And we've seen the implications of that in terms of how markets have performed over June. The Chinese SSE composite, for example, is down 8%, and other emerging markets are also down over the month. Is that driven by these trade wars?
Yes, definitely. So what we're seeing, the Chinese share market is basically the epicenter of these concerns about the trade threat. So the Shanghai market was down 8%, and if you went even to Hong Kong, which typically is a more resilient share market, it was down 5%. And running across the board, Korea, Thailand, all suffered weakness because the concern is that their exports to America will be shut down or will be penalised by these higher tariffs.
And that contrasts with the performance of some other developed markets, which broadly speaking did okay?
Yes, so America's market was up about 0.6%, and they're not particularly concerned about this tariff issue. They're still of the view that the US corporate profit story is quite robust, plus 20% gain in terms of profits for the year to June is the expectation. Plus also the Trump tax cuts has also helped the corporate sector in particular. So that's isolated America for now, but what we have to bear in mind is a lot of American companies have global supply chains. So they source from both China and Europe for some of their imports. So they will eventually be sensitive to this tariff issue.
What about the Australian share market? How did that perform?
Well, the Australian share market was quite resilient. It was actually made a gain of 3.2% for June. So what you saw is very robust performance from the energy sector. In particular, it made very strong gains with rising oil prices. Also saw the information technology sector do extremely well. It made a 7% type return. So that's very much encouraging for the Australian share market. Against that, the telecommunications sector continues to struggle.
What about the Australian dollar? It's fallen considerably over the last year or so and slightly further over the last month, so now down at 74 US cents. Is that driven by this risk-off kind of attitude?
It is very sensitive to the China story. So if China's being penalised in terms of its export performance, then potentially it has negative implication for Australia in terms of our iron ore and coal exports. So because of that, the Australian dollar is a little bit of a barometer for that China concern. And when China is under pressure, the Australian dollar typically falls. And that's what we're seeing at the moment.
Thanks for your time, Bob.
Thank you, Sinead.
And thank you for joining us. If you'd like further information, it's available on the website where you launched this video.